In the high-stakes world of currency trading, fortunes can be made or lost in the blink of an eye. But what happens when one man's billion-dollar trade raises more questions than it answers? He's been hailed as a financial wizard and a master of the markets with an uncanny ability to predict the future. But beneath the surface of George Soros' billion-dollar bet against the British pound, there lies a story untold, riddled with controversy and ethical dilemmas. Was it a stroke of genius or an opportunistic play on the vulnerability of an entire nation's currency? And at what cost does this financial gamble come to the ordinary citizens whose lives were caught in the crossfire? Today, we peel back the layers of this complex narrative, exploring the intricate web of decisions, actions, and consequences. Join us as we delve into this untold story of wealth, power, and controversy of one of the most profitable Forex trades ever. Okay, so let's break this down. So all of this happened again before the euro was actually introduced in 1999. And just to give you an idea of the setting, and this was after the Second World War, where Europe basically decided to band economies together to prevent them from fighting with each other and causing more war inside of European countries. So basically what happened was in 1979, the European countries came together and formed something called the ERM, which was the exchange rate mechanism. And basically what this was all of these different European countries kind of bond to each other together at a fixed rate. So meaning that you don't have any one currency that's way too high or one currency that's way too low. And the reason they wanted to do this was, number one, to make it easier for trade to happen amongst different countries inside Europe, to make travel simpler, and hopefully to prevent a massive war like what happened in World War II within Europe. So the really simple way that you can think of the ERM is, imagine there's 5 of us and we're each holding a cone of ice cream and we form a circle basically. And if any one ice cream cone drops, then it's forced to basically raise the ice cream cone higher, so that way it's fixed, or it's about the same as all of the different countries or all of the different ice creams in this scenario. It was the same thing with the ERM, where basically if one country's currency started falling below the fixed rate of the ERM, then the central bank of that country had to buy its currency to prop it up to be fixated or similar to the other countries inside of the ERM. Okay, hopefully you're following me so far. Now, the UK Prime Minister at the time was a lady named Margaret Thatcher, who didn't want to be part of the ERM. But what happened was the UK economy started to worsen and go into a recession. And eventually in 1990, a new prime minister was elected who basically ran on this fact of, hey, I'm going to save the economy by having us join the ERM. And he got elected. Again, this is in 1990 when the UK decided to join the ERM. And also at the time, the UK was in a recession. Now, from the years of 1990 to 1992, the British pound really suffered. And because the British pound was suffering, again, like my analogy that I made earlier about the ice creams all needing to be at a similar height, the Bank of England essentially had to buy up millions and millions of pounds in order to prop up the value of the pound, so that way it could continue to stay inside of the ERM. So it was right at about this time, this is where George Soros comes in. Now, if you're not familiar with George Soros, he's a famous speculator, trader, investor. He owned a massive hedge fund that he'd been running since the 1970s. And basically everyone knew that the pound was going to crash at some time. They just didn't know when this was going to happen. And Soros also knew that this was going to happen. He knew that all that they needed was some really bad news to come out, or some fearful news to come out, and this could send the pound crashing. So in 1992, George Soros and his fund actually began shorting the pound. So basically what he was doing was he would borrow pounds from different banks and different funds. And his idea was, when the pound started to crash, he would actually buy back the pounds at a cheaper price, making a profit on the trade. So by August of that year, he had basically built up a short position of $1.5 billion, basically meaning he was betting against the Great British Pound. But the exchange rates really didn't move much, and he knew what he needed was some bad news to come out. So in September, there was this interview that basically went viral back then, with the president of the Central Bank of Germany. And what he said is, he said it doesn't rule out that some currencies might come under pressure. And at that time, Soros heard that interview and he basically borrowed a ton of money. And so pretty much overnight, George Soros picked up the phone, was calling different banks, funds, anybody that he could get money from, and he borrowed like $10 billion worth of pounds. So overnight, what George Soros did is he made some phone calls to different banks and different funds and tried to borrow as much money as he possibly can. And he ended up selling about equivalent of 10 billion pounds. So now not only Soros is speculating on this news, but a lot of other people start speculating on this news, shorting the pound. And so what happens within a matter of like 24 hours, the Bank of England is in chaos. So the chancellor initially purchased $1 billion. It doesn't really do anything. Then he goes and he purchases another $2 billion in that same day, and it doesn't do anything. So they're basically freaking out. And what they ended up doing is increasing the interest rates by 2%. So from 10% to 12% on a totally emergency basis, which if you know anything about interest rates, a 2% hike in interest rate can completely change an economy. And this happened without any prior warning or without any prior signaling. It was just all of a sudden in an attempt to save the British pound. By the end of the day, all of this chaos is happening. Britain purchased 27 billion pounds and increased the interest rate again up to 15%, all in an attempt to save the pound. So you basically have the Bank of England buying, trying to prop up this currency, and then George Soros and all these billionaires and a bunch of other people speculating and shorting the Great British Pound. And eventually this day comes to be known as Black Wednesday, but basically at 7:30 p.m. on this Wednesday, Britain finally accepted defeat and they announced their withdrawal from the ERM. And over the next few days, the Great British Pound fell 15% to the German mark and 25% to the US dollar, and George Soros pocketed an estimated $1 billion from this trade. Now, was this ethical or not? That's up to you for interpretation, but some of the major consequences to this were, number one, he was basically profiting from other people's misfortune, and the Great British Pound, the entire country really suffered for a short period of time with higher interest rates and the devaluing of their currency, which made it more difficult for people to live. And that's why some people really hate this man. And some people just don't think that shorting currencies or shorting companies is an ethical thing to do. Even though it is legal, a lot of people question whether this is moral or not. Now, ultimately, what ended up happening was over the next few years, England began to cut interest rates, dropping it all the way from, I think it was 15%, all the way down to like 6%. And the British economy actually started thriving again. And ultimately, the Great British Pound returned to a higher value than it even was before the ERM. But a lot of people did suffer in the meantime. So I'd be curious to know your opinions on this. Is this something that's completely unethical and profiting from other people's misfortune? Or is this somebody that's just being smart and realizing what's happening and making a profit from it? Let me know in the comments below.